What's up, guys? In this video today, we're going to be going over a very important trend in the global startups and venture capital world. Guys, the market is getting better and capital will be flowing again. Cue the intro. Okay, guys, as referenced, right, we now know that the economy sucks as a whole, but something interesting is happening. Now, let's go back to the COVID times, right? This was times of very high valuations. People didn't know what was going on. A lot of companies got overvalued, and then there was a big market correction. Because of these overvaluing of companies, it led to at least 3,000 globally being shut down. There was a lot of valuations that were overpriced, and people had to slash, bridge rounds, hair on fire, all this other stuff. And to kind of make matters worse, this signals to the LPs or the limited partners that they did not want to invest in venture capital funds or startups for a good amount of time because they no longer deemed this investment as a safe investment. So they pulled back, and then startups were in what's called cash preservation mode, hanging on for dear life, external financing pretty hard outside of grants and other things like that, which were very minimal, and all these other things. In fact, Q1 of 2023, we were actually seeing a lot of venture capital funds not investing in new startups, but holding their capital and working on their portfolio companies until this all kind of fell through. Meanwhile, we kind of saw some interesting activity, starting with the AI boom. There was a inflection of capital in AI startups as the next hot sector, which opened up a lot of new problem spaces for startups and integrating AI technology into existing startups to kind of push the pace forward. Now, with that being said, a lot of people theorize, and data that I'm about to show you, that market correction has actually came through, and now there's a new standard for startups in the future now that the overvaluation period is over. So what I'm showing you now is the TechCrunch and PitchBook analysis of what's been going on in the very successful 2024 so far. So guys, as we see here, right, the deal value right now, we're just literally 2 quarters in, and we're already looking to eclipse 2023 and 2024. Now let's go over to fundraising activity. Already halfway through 2024 with very good numbers compared to 2022 and 2023. Now, this is what's getting a little bit interesting, right? Exit value, right? When a company exits, that normally composes of enterprise value for the investors. So in 2024 alone, the exit value is 49 billion, and the ones in 2023 alone was 65.3 billion, and they're doing this on only half the deals. Now, that's very interesting. Now, what do all these numbers mean? Well, let's talk about it. So this means that because the startup ecosystem is becoming more confident with investor financing, that means that with these more reasonably valued startups, investors are more than happy to kind of put their skin in the game. Now, with that being said, now we have new standards for what's going on in regards to valuations. We have LPs, right, now looking at the alternative asset class, which is startups, venture capital, and outside of things of like real estate and all these other assets as things to look at in the future. Because as a reminder, they don't see these returns until 5, 7, 10 years down the line through a major liquidation event. And all I'm trying to say is that investors now see that the coast is clear for these types of things as well. Now, according to other resources like PitchBook, they're saying that the deal volume is still sluggish, the amount of deals that's invested in any period of time, but the exit value within these deals are at an all-time high. Now, what this means that investors are starting to see that when they're looking at these deals, they're getting the more bang of their buck without doing more frequent checks. Now, I theorize that this could be a thing as well. Not only a bunch of bigger checks over a period of time, but smaller checks coming from smaller funds, but really knocking it home with the enterprise value that what they're creating. PitchBook also says it's a good market right now, and if you're a strong company, but if you're struggling to hit the growth targets that you set out before the pandemic, it's a really hard market. So what this means on the founder side is that there's something interesting happening. Now, this new market is now having valuations businesses that are overvalued as stated previously. What this means is that founders are actually held more accountable to having a better business model, better KPIs, and a more honest projection about how they can impact the market. You're not seeing crazy things anymore, like overvalued companies that are projecting what they're doing 5 to 10 years out, saying that they're going to be a unicorn in year 2. This also causes investors to refine what's called their due diligence process and stay within companies' ranges to make sure that they're not overvalued or getting screwed on the deal. Now, there are some economic factors that actually goes into this. The United States might actually cut interest rates soon, which gives more buying power to the consumer to go out here and purchase a lot of what these startups are doing. That's big, right? Because at the grand scheme of things, you can only produce revenue based on what you can sell. Yes, companies may have good business models, but it's always customer centric at the end of the day. So yes, in combination with US inflation rates calming down, the AI boom, and all these other things, and the public stock market getting a significant run up, which means that we can show a lot of what the public activity is doing and trickle it all the way down to startups and venture capital. And pending any type of global catastrophe, we can see this trend move more and more into the future. So guys, with that being said, turn your notification bell on and all these other things. And I just kind of wanted to give you guys a overview of what's going on in the global market. The sun always rises in the morning, and it seems to be an optimistic outlook for startups that want to raise in 2024 and beyond. See you in the next one.